All right, when we fill out our cash flow here, the first thing that we do is we just write down how much income has come in for the month. Now, this income is after all the deductions, after your employer takes everything out. So health insurance is already taken out and all that. We want to know what your net amount is. Then if you tithe, you take that off at the top, which is $480. Now, when I was looking at this budget for this client, we looked at their last 3 months of their bank statements. That's what I would suggest you do also. Take a look at the last 3 months and see what the average is of how much you're spending. Now, I think a good idea is to sort of have a budget for like a Walmart budget. So this way, everything you're purchasing at Walmart, so if you're buying pet food or laundry detergent or all that type of household items, I like to consider that in food. And what we found out, they spent about $1,000. They were a family of 5, so it was both of them and 3 kids. Now, for their utilities, that was $875. So that's just, their electric bill was $250, phone bill was $210 or $215 because that's a cell phone, and then their cable and water bill and their gas bill is all in there. So remember that. Now, their shelter, they are buying, so their taxes and insurance were already in the mortgage. Now, if you rent, that would go here also, but if you have a mortgage that doesn't have your taxes and insurance in there, go ahead and take the yearly amount and divide it by 12, because everything in your budget, all these items that are on your budget portion of your cash flow, they need to be broken down monthly so that it's there. Okay, they had one car was paid for, and the other one they were still making payments on. For both of their cars, it was $140 a month, and the gas that they used monthly was $250. I think that's pretty self-explanatory. If you have any questions on any of this, go ahead and just leave a comment below. Their medicines, they get it in 90-day supplies, but it came out to about $50 a month, because remember, we want to break everything down monthly. Their life insurance, they paid quarterly, but it came out to be $80 a month. Disability, that was taken out at work, so we're not going to worry about that there, but that's something that's important that we put on here. So if we take a look at all their expenses, this comes out to be $4,050. So what we want to do on this here is, once all this is paid, we do not pay anything else. We don't pay credit card statements. We don't make payments to anything else until everything in our budgeted items is paid for. There's no reason to be up to date on your credit cards and everything if we haven't paid the mortgage or anything. So the first thing we pay is food. Second thing is utilities. Then you have your shelter. And then this right here is your transportation. That's what has to get paid. That's the order that they get paid to. So that's the first thing. Now, when we take a look at this with $4,800 income and we take that out, that means that they have $750 in excess income. All right, so this is what we want. This is the first step. We just want to make sure we put all this down, and then we figure out what our excess income is. So that's what we're going to use to do our debt reduction, and then to pay for the current bills that we have now. Okay, when we take a look at their current bills, the first thing that we want to do is stop using credit cards. We cannot keep on putting stuff on credit cards. That's pretty self-explanatory. If we're starting to try and get out of debt, we have to stop using the credit cards. Also, like we talked about earlier, stop all 401ks or any type of retirement planning, because we're not getting a good return on that if we still have these debts going out. So now we do, once we pay off our debts and everything, we do go back to that and start that. So we're just stopping it for now. Okay, so I'll have a lot more on this, and also make sure you watch our future episodes on on 401k plans and how you're setting up your retirement accounts. But just for right now, until we get out of debt, we stop that. So the first thing I want you to do tomorrow morning is go to Human Resources and stop taking anything out to go to 401ks unless you're out of debt. Then we need to stop using our debit cards. I know it makes it a lot easier, but what we need to do is actually start having a way to gauge how much money we're spending. And when we use our debit cards, we spend about 30% more if we're just swiping a card, because we could have a budgeted item and we're swiping. You'll see here in a second that the first thing I want you to use cash on is food, but we're swiping and sometimes we don't realize it. We go back and look and we spent more than what we budgeted. So I want you to use cash for some of these budgeted items. The first one I want you to start with, this is the only thing you need to start with, but I want you to start with your food budget. Go ahead and take however much you need out for that weekly or for a 2-week period, depending on how you get paid. And I want you to go ahead and take it out. So let's just say this person got paid weekly. So that would be $250 because their bill was, their food bill was $1,000 a month. Now what I want you to do is just go ahead and pay your bills the way you normally do. So in other words, your account shouldn't be getting hit all the time. So you should know how much is in your account. You don't have to keep on going back and checking it all the time. Because anything that we spend now, we're going to try and do it with cash. And I'll show you in a second how we do that. Okay, so like we said there, after you take out the $250, you just go ahead and pay the rest of the bills out of your account the way you normally do. Now, what you want to do is after you take that out, you want to make minimum payments. I realize, just follow me here for a second, but you want to make minimum payments to all your credit cards. So when we take a look at this, their credit cards they had Kohl's that they had $500 of a balance on there, but it's $75. I want you only to calculate up what your minimum payment is, not how much you send, but how much the actual minimum payment is. We see that theirs is $475. Okay? So that is the next thing we do. We have $475. Okay, now when we look at this, our excess income was $750 from the first page. When we looked at this, we know that we had $750. That's just your $4,800 minus your expenses, okay? So we have $750. Now we've taken out $475 for the minimum payments because your minimum payments to your debts is the first thing we pay out of excess. Then the next thing we pay, whatever is left, which is $275, we put into a savings account until we have saved $1,000. We do not buy or do anything else except these two things for the next month or two. This is very important to get this $1,000 in there as fast as we possibly can. Okay, now once we have the $1,000 saved in emergencies, then what we're going to do is we're going to start breaking it up where this $750 of extra cash flow, you're going to have 40% of it go into where we could spend it monthly. So then now you have it where you can do, let's take a look at this real quick. 750 times 40%. Okay, so then you'll have $300. Now this $300 is going to be for your spending. So now let's say you want to purchase, it's not that you can't purchase stuff now. Now you have this $300 to purchase it. But what I did say earlier is you can't put it on credit cards anymore. So let's say you want to purchase, let's say an $800 television. If that's what you want to purchase, go ahead and do it, but don't put it on a credit card. Now you got to set up a thing with this. Maybe you save $50 or $100 a month until you pay that off. Okay, you have to save up enough cash to go out and purchase it. So that is also one of the big things we have to remember when we're starting off, is that anything we want to purchase, it's not that we can't make purchases, but now from our spending money that we're using, we have to use this money to save up enough to make that purchase cash. We can't put it on a debit card. And then the rest of it, the 475, this is going to go into reducing your debt. And I'm going to be talking about what we're doing for debt reduction strategies, and I'll show that in our next class. But if you have any questions about this, go ahead and leave it in the comments below. Also remember to subscribe, because then you'll get an email every time I upload a new video. And this way you can keep on top of it. Also, if this is helpful to you and you know other people that this would be helpful to, please share the link to them so that they have a chance. This is a way that will have other people come here and ask questions. And as I answer these questions, it's going to help a lot of other people that maybe were either embarrassed. Sometimes when we think about this, as we go through the rest of the class, a lot of people feel embarrassed about this situation that they got into. There's no reason to do it, because we're going to talk about it also in the future, is that we have a society that's actually setting us up for failure, like we talked about in the beginning. So we don't want to worry about that. But go ahead and subscribe. Go ahead and email the links, or share it with your friends on Facebook that this might help out. And if I could help you in any other way, leave a comment down there, or else you could always email me directly. That's all going to be in the links and everything. But other than that, thanks for tuning in, and I hope everyone has a blessed day.